Hey everyone, welcome back to the channel. Today we're breaking down Bajaj Housing Finance Limited, also known as BHFL, a fast-growing housing finance player backed by the Bajaj Group and part of the Bajaj Finance Bajaj Finserv ecosystem, which is one of India's strongest lending franchises. The stock is currently trading around 99, and recently there was a large block deal which has created a lot of buzz and short-term volatility in the market. So let's decode whether BHFL is a value buy, what the fundamentals are telling us, and what should be your entry and exit strategy. First, a quick stock snapshot. The current price is hovering close to the 99 zone, with the 52-week range roughly between 85 on the lower side and 120 on the higher side for this mid-cap name. The stock has corrected from near the recent highs and is now stabilizing around this band, while a fresh block deal has triggered short-term volatility, but also signals continued institutional interest in the counter. BHFL is essentially a pure-play housing finance company, benefiting from structural growth in home loans, rising affordability, and strong brand trust under the Bajaj umbrella. Now coming to the business overview. Bajaj Housing Finance operates within the Bajaj Finance and Bajaj Finserv family, leveraging one of India's most diversified NBFC platforms. The core business is spread across retail home loans for both salaried and self-employed customers, loan against property, co-lending with banks, affordable housing finance, and cross-selling through the Bajaj Finance network. The biggest advantages are strong underwriting practices, very low NPAs, and access to Bajaj Finance's large customer base and advanced technology stack, which together create a solid moat versus many standalone housing finance players. Let's look at the latest performance trend. BHFL has been delivering consistent AUM growth year after year, supported by rising mortgage penetration and a broad product suite. Spreads and NIMs have remained stable. Asset quality has been healthy with GNPA at relatively low levels for the sector, and operating leverage is improving as the loan book scales up. The company is riding strong housing demand from Tier 1 and Tier 2 cities, which combined with Bajaj branding and credit discipline is helping it steadily compound. Now the key strengths. Bajaj Group backing gives strong trust, higher brand recall, and better access to funding markets. The loan book has been growing faster than many peers, with a clear focus on secured lending segments like home loans and loans against property, which generally carry lower credit risk. Technology-driven underwriting, low NPAs compared to many housing finance peers, massive distribution via the Bajaj Finance network, and comfortable capital adequacy together position BHFL as a long-term structural compounder in the housing finance space. But there are some risks you must keep in mind. Interest rate cycles can impact affordability and slow housing demand, especially if rates stay elevated for longer. Competition is intense from large players like HDFC Group entities, LIC Housing, PNB Housing, and newer digital-focused lenders, which can pressure spreads over time. The recent block deal, where the promoter Bajaj Finance is selling up to about 2% stake at a discount to the market price, has led to sharp near-term volatility and could keep traders nervous in the short run. On top of that, the NBFC-HFC segment remains under strict regulatory oversight, and the stock often commands a slight valuation premium versus traditional HFCs due to the Bajaj pedigree, which creates valuation risk if growth disappoints. So what should be the entry and exit strategy? For the short term, say 3 to 6 months, it is better to avoid fresh entry because of the block deal overhang, elevated volatility, and price consolidation around the current band. If you are already invested from lower levels, it makes sense to keep a strict stop loss near the 90 zone to manage downside risk in case sentiment worsens. For the long term, with a 1 to 3 year view, the ideal accumulation range looks more attractive closer to 85 to 95 levels, where valuations turn relatively safer and downside seems more limited. On the upside, a broad target band of around 140 to 175 over the next few years can be considered, assuming the company continues to deliver healthy AUM growth, maintains strong asset quality, benefits from rising home loan demand, and keeps leveraging the Bajaj Finance ecosystem. Overall, Bajaj Housing Finance comes across as a high-quality housing finance player with strong backing, disciplined underwriting, and steady compounding potential in a structurally growing segment. Short-term movement may remain choppy because of the ongoing block deal and supply from the promoter, but long-term investors should definitely keep BHFL on their watch list and look for opportunities closer to that 85 to 95 zone for staggered accumulation, always aligning with their own risk profile and asset allocation.